Hello and welcome again to iGold Advisor. It's September 18th, 2015. Today we are presenting our latest analysis on the gold and silver markets. I know it's been a tumultuous week in the markets in the United States with the Federal Reserve keeping interest rates the same, surprising some, not surprising others, but today we're looking at how that has impacted the development of the bottoms that are forming in gold and silver. And we'll start off with gold. I'm going to try to keep this one a little shorter. I know some of the last videos have run a little long, but there's been some analysis that I've been trying to present to you, and I hope that's been well received. So we just want to always start with this chart because it's so important to look at this long-term perspective for the price of gold. You have gold, again, that has broken out over a multi-decade consolidation period, is coming back down here into a very important support level that happens to coincide with several indicators. Here's our stage analysis for a market. We're looking at gold entering a period of a stage 1 bottom. And note that this chart here shows most stage 1s forming at around the same level. Gold is forming a stage 1 base right now above the previous stage 1 level from the 90s and the early 2000s. So this chart here is not saying that every stage 1 has to start at exactly the same level. We are forming a higher bottom right now in the gold market. So let's pull up that key here just so we're all on the same page again about what all these lines mean. We've got our horizontal support and resistance lines shown in black. We've got our Fibonacci retracement levels here in silver. Previous all-time high shown in gold. The long-term trends shown in magenta. The primary trend lines shown in blue. If we have short-term trend lines, that'll be in teal, and broken trend lines will be showing in turquoise so that you can sort of quickly see over it, but at the same time still not forget about those broken trend lines because they are important. Red is going to be to call your attention to something, and green is going to be as we look at targets. So again, we do have this target here for gold somewhere in the vicinity of 850 to 1,000, which corresponds with this Fibonacci retracement at the 61.8 level, the all-time high, and this linear long-term magenta trend line. So we are still saying there's this possibility for one more leg down in the gold market. Let's zoom in again now and take a look over the last 8 years, and we can see as we zoom in to this decline, here's the situation. You've got this primary decline within a larger term decline, and then shown here in teal, the very short-term decline that we're getting close to breaking out of. So that'll be something that allows us to then challenge this primary decline. Notice the declines are getting less and less steep as we go along, and this is a bottoming process. Let's not mince any words. This market is bottoming. This may not be the exact bottom. That's what it's saying. But for anyone with a short-term time horizon, the trading here might be a little difficult. Anyone with a longer-term time horizon, this is going to represent an excellent period for accumulation, either of metals or of the real top-tier gold mining equities. A topic for another day. Zoom into that primary downtrend, and we can see here gold over the last 2 years. You could see this line right here from the February high has been hit once, twice, 3 times, 4 times, and here we are approaching it 5 times. My take on it is it's not going to break above this line right here and right now. I have a feeling based on this head and shoulders pattern here that I've been looking at for the last year that, as I said a few slides ago, that gold needs to take one more down leg here to around the 1,000 or 900 level. So I am seeing that this is potentially an area for a top right now. Could I be wrong? Absolutely. But the best of my analysis shows me that this downtrend line is going to hold. And I have a number of other indicators that we can look at another time that gives me corroborating evidence for that, such as the ratio of the gold mining equities to the price of the metal. Some motions in the stock market can also help predict the price of gold. So we're going to be looking at all of those as we go along. But this is just to give you a quick update, guys. We're getting close to this downtrend line here, and I would expect gold to back off over the next week. And just to look at that from a 6-month view, here we are. We can see sometimes this line can be broken, but that represents a false breakout and it has fallen back down. So here on a technical basis, on the very short term, it has broken this. I am expecting it to fall back down here and maybe find support on this teal line as this triangular consolidation plays out over the next several weeks. And then we'll have to see from there, do we have a legitimate breakout, or do we meet those targets that I was talking about down below 1,000 perhaps? And just to back it out, so we don't forget what we're talking about here, even if we take that one more leg down, we are talking about this bottoming process, this long-term bottoming process put into play. So for anyone who's looking at maybe a monthly accumulation pattern for gold here, a plan for accumulating either the physical metal, some of the ETFs, or some of the mining equities, you may not want to hold off. You may want to be dipping your toe in the water here as this bottom forms, which may take, again, the next 12 to 18 months for this long-term bottom to fully be put into place. It's an excellent time right now for accumulation. Let's move over to the silver side, and it's similar but not the same. You have, of course, on this long-term chart, the 1980 peak, which is yet to be exceeded. You have the long-term linear trend line that is being hit right now. Silver likes to violate long-term trend lines to kind of flush everyone out, so I wouldn't be surprised if this dips below that trend line for a few weeks or so before coming back above it for a final flush. Whether or not it does that really will be immaterial in the long term. If there's any way you can take a step back here and imagine that over the next 5 to 10 years, the price of silver exceeds this long-term high and then maybe makes a multiple of this long-term high, you will literally not remember whether you bought at 14, 15, 12, or 17. It won't make one bit of a difference if you are holding this asset for a long-term investment, which is what I recommend. Zooming in here now, we're looking at the bottom forming, coming up to that long-term trend line. Here's some broken trend lines, so that shows us that the steepness of the decline is getting less and less, and now we're in this less steep downtrend line here. Bringing up that key again, just so you can see, we're using the same key for both the gold and the silver charts. Zooming in here to the 2-year time frame, and you can see now we're magnifying at one level, so our long-term trend lines become this magenta. That corresponded to the primary downturn trend lines from the previous chart. And you can see this mini head and shoulders pattern that we're still looking to see if that reaches around $12.50 an ounce. You do have this short-term trend line here in blue that's been broken above a couple times and is actually broken above here over the last 2 days as we've gotten right around $15 an ounce. But you can see that this has led to a number of false breakouts, so I wouldn't be surprised if that happens again. But regardless, this is what we would consider to be a bullish descending wedge pattern. Just backing up here, This is a pattern where the slope lines are coming in, and they are coming in from a long-term descending pattern into the short term as this descent is getting less and less in the slope lines. And so we are waiting to see this nice long-term downtrend line comes in here right around 1650. So when that starts to bump up again there and then finally breaks out of that, we're going to know that this downtrend is basically in its final innings. And from there, we would expect some consolidation here around that $18 an ounce level. So we're waiting for that. We're not there yet. But again, just to zoom in at this final time using the SLV fund so we can have intraday data, you can see that this line has actually been broken here. But you have this horizontal resistance level right around 15 on the SLV, which corresponds to 1550 on the price of silver. So I am expecting that when that is hit right around here, we may take a step back down. But to back that way out again, guys, remember these little tiny motions, for those of us who are not trading on a daily or weekly basis, are going to mean very, very little in the long term of this market, especially if you have a long-term accumulation plan in play. That's absolutely what I recommend. So just to look at the summary here, we are again forming these bottoms. The all-time highs will eventually be tested, and my prediction is that they will be exceeded. But again, we're talking about a 5 to 10 year time horizon. So what this represents for individual investors is an ideal time to accumulate your long-term positions. And if you're a trader, you may enjoy following some of my shorter-term predictions. If you're an investor, you may enjoy that. I do. I like to look at the short term and see how that plays in with the long term. But don't let it take you away from the long-term perspective, which is that these bottoms are being put into place right now for a move that I believe will eventually exceed those previous all-time highs, 1900 for gold and $50 for silver. So on that note, guys, this has been Christopher Aaron again. Take a look at my website at igoldadvisor.com. I do have a free report if you would like it on what I believe to be the strongest members of the gold mining equities from the major category. Those are the largest producers for anyone who's interested in accumulating a position in the largest segment of the gold mining companies. And I also have some premium research that's now available on the site if anyone would like. There's a free sample to look at that. The report that I've just released is a detailed 41-page look at every single gold and silver fund that is available on the ETF market. These are some of them allocated, some unallocated gold and silver bullion funds, some of which even allow you to take delivery of your gold or your silver at a certain level. So these are a way for people to purchase gold and silver for a long-term basis with the click of a mouse. So again, that's available on my website under the premium section, and there's that free report for you there too under the free reports section. Thanks for joining me, guys. I will try to get this updated again within the next week because these bottoms are very dynamic, and it's going to be an exciting time for anyone who is accumulating here in this time window as we progress over the next several months and these bottoms are put into place. Thanks for joining me.